Hello, everyone. Welcome to the InfoVest podcast. My name is Daniel, and today is December 17, 2020. And we're just going to quickly go over the markets. So we had the S&P, NASDAQ, Dow, Russell, all kind of mixed yesterday as the big event was the FOMC. Kind of had a balanced day where we just kind of ranged most of the day, and the big headline, the big news, as I mentioned before, was the Fed coming out and announcing its plan. So basically, just to sum up, the Fed enforced kind of an open-ended stimulus plan to spur the recovery. So everything was left as expected. Nothing too new and nothing too drastic. Kind of the Fed, the rhetoric was that they will take things, they'll kind of tread waters carefully and take things as they come. They were open and willing to do things as needed, and they're willing to be open and help the economy as needed. So the biggest thing is that they'll continue their bond buying until there is substantial progress. So they kept using this term, which the media and everybody is talking about, is this term of substantial progress. So just to sum up on kind of the numbers, the Fed held its target between 0 to 0.25% as expected, and they said it would continue with its debt purchases until substantial further progress have made in the recovery, and that's further progress would be the high. It would be the 2% inflation mark and the unemployment being improved way substantially. Again, they didn't put a mark on it, but they used substantial as their word. And in terms of the inflation, it tends to be the 2% mark, and that reaching to that will take some time, as they have adopted in the previous FOMC meeting the AIT average inflation target. And the bank also maintained its monthly purchases of treasuries and MBS of $40 billion, but updated its language to state a specific level and removed any references to buying at the current pace. And 2023 still remains its target of keeping rates lower. However, their new projections, like I mentioned in previous podcasts, was their projections of GDP and the growth outlook for GDP, inflation, unemployment improved compared to the September's meeting. So they do seem more optimistic. They showed more optimism into the 2021 and 2022 and further out. So that kind of signals that if things are expected to be good, there wouldn't be any need to increase QE or do any more extension or anything like that. Nothing on that front in terms of doing more, and with even the guidance being, better, you kind of can expect, that maybe they could increase rates, maybe they sooner, or maybe they could lower the QE. We don't know for sure, as they didn't give much detail other than just their change in projections, and that's what you can infer from those projections. Now, did they say it explicitly? No, they're very good with their wording. They're very careful in how they speak and what they say. They've just continued to word that they will continue to support the economy and continue to support with until they see substantial progress and until the virus and the economy gets better. So the key from this is we'll have to watch economic data coming out in the next several months, in the next year, and we'll have to watch inflation to see if it rises above 2% to see if there would be any shift in the Fed's views. We also talked about the extension in the weighted average maturity, the WAM, and we talked about that they could potentially increase the duration of their bond buying and move it more on the long end. They have not mentioned that at all. So because of that, and because it wasn't super dovish and the markets didn't get exactly what they expected, we did have that initial knee-jerk down in equities and in bonds as yields rose. We did see the dollar also rise, and we did see gold being affected as well. But as the presser and as the press conference came out around 2:30, we did see the full reversal in equities and reversal in bonds and also in gold, and the dollar dipping back again. So we had a rally in dollars since then and overnight, and in bonds we did reverse back to price level 1, and even in equities. So it changed quite rapidly, as the Fed was showing that they would still remain supportive if needed. As of right now, bonds continue to be in kind of a trading sideways motion. Equities, on the other front, overnight has rallied. The S&P 500 reached to the 37.18 mark, and we had also NASDAQ, Russell, and Dow all also rally overnight during the European session. And so now we're seeing kind of a slowdown as the North American session is coming to an open very soon. And we also have seen gold continue its rally, the euro continue its rally, the pound continue its rally, and the dollar continuing its dip. We also seen oil also coming off as we speak. So a couple of things overnight. The thing to watch out for now is this stimulus talks. There is news that is coming out that we are getting closer to getting a stimulus bill out. So that's kind of the expectation. That's what's kind of holding equities higher. Now, keep in mind also that we are not far from Friday. I mean, tomorrow's Friday. We have quad witching, which means that every third Friday of the month, you get kind of this option expiry, and you kind of get this allocation and change of positioning when it comes to options. So that can bring in a lot of volatility and a lot of choppiness in the markets, especially on Friday. So that's something to watch out for. And as we near to Christmas, because literally Christmas is just a week away, and the end of the month is just 2 weeks away, we will continue to monitor if we will get this stimulus bill out soon. Hopefully the expectation is we could get something either today or tomorrow, but you never know. With politics and politicians, you don't know how things will end up. So that's something to watch out for. Now, in terms of Brexit, again, the news has came out that they are expected to come up with a deal, hopefully by this Sunday. So we can see that the pound has all the way has been rallying and reached up to 1.36. So it continues its rally, and any good positive developments, especially on Sunday, we'll have to monitor and see. And we'll have to continue to watch if they do come up with a deal. If they do, we'll see a pretty big relief rally in the pound. If not, then we could see some sort of selling in the pound. So that's again something to watch out for, as this week remains to be an important week. We did have the FOMC. We do have kind of stimulus talks that are expected to come out. Hopefully, stimulus bill by this Friday. Brexit talk. Hopefully by this weekend. So we'll have to continue to monitor, as all these have certain implications and affects the market in some way. In other news, we've seen Bitcoin near 10% gains on the day, even as we speak. It's breaking to all-time highs. We've seen first Bitcoin hit 20,000 overnight yesterday, and then that fueled gains even more as price reached a 23,000 mark. Fundamentals may not make sense in Bitcoin. Some people may not understand Bitcoin, but it is getting this fuel and it is getting this demand where people are pushing Bitcoin higher. Even Ethereum reaching its all-time high of 600. So the thing about Bitcoin, I mean, I probably have to do a podcast on this later. The thing that is changing and is evolving, that we're seeing family offices, bigger wealthy institutions taking Bitcoin seriously now. We're seeing them, putting at least 1% of their wealth into Bitcoin. Why is that? Well, if I were to speculate, the one thing that I would mention is Bitcoin is a hedge against fiat currency. If the US dollar, as I've been talking about in the past couple of podcasts, as we've been noting and we've been seeing together, that the US dollar has been on this downward trend, and if it continues and it continues to be weaker and weaker, and if hypothetically we get to a point where the US dollar doesn't become the world reserve currency, or it becomes very weak, or we start to adopt from fiat currency to digital currency, then you can see such cryptocurrencies, such new technologies prosper, such as Bitcoin, due to its high demand and very limited low supply, and that supply is expected to also shrink. And if that happens, and if that occurrence happens, and you get more family offices, more wealthier people piling in money, then you can see this trend. I mean, today we are seeing that. Could we see Bitcoin hit to 30,000, 40,000, 50,000? Sure, why not? Definitely, it's still very small when you compare its market cap to gold. Many times people compare Bitcoin and gold as the Bitcoin being the new hedge, the new commodity, the new gold. So, and sometimes you have this correlation that people have done between gold and Bitcoin. As gold comes down, Bitcoin goes up, or them both going up together. So, same thing with the US dollar coming off. Bitcoin is being more of that positive, having that positive trend with the US dollar coming off. So we see actually both Bitcoin and gold going up together with the US dollar coming off. So it's something to keep a note of, something to keep an eye on. There are some Bitcoin related stocks and blockchain related stocks out there. In terms of a Bitcoin ETF, nothing has been really been approved, but there are some stocks out there that people purchase on to take advantage of this Bitcoin hype. So that's something that we probably should talk about later on, is more about this Bitcoin. But to sum up, we've hit that $23,000 mark. I wouldn't be surprised if we continue to see FOMO coming in, fear of missing out, traders buying in at high prices, even wealthier investors, wealthier institutions, family offices buying at this level. The euphoria continues, but in my opinion, from watching Bitcoin, this is just the beginning. I feel, if I were to speculate here, that this is just the beginning in Bitcoin, and there's a way, way, way longer route for Bitcoin, much more. For sure, there's going to be ups and downs, swings, swings up and down. You are going to get people coming out saying, I told you so, and this and that. People are going to be buying at highs, and then it's going to retrace, and then you're going to have people selling out, and then you're going to have kind of the lows in Bitcoin back again. Could be back at levels at, 20,000, 15,000, 10,000, 8,000, and then back up again. Bitcoin does have wild swings. It does have wild swings. But to be honest, from looking at this, from just kind of my point of view, I wouldn't be surprised if we see Bitcoin at 30,000. And then we continue the train to 40,000, to 50,000, and all the way to, believe it or not, 100,000. It would not surprise me. So again, it's off the idea for Bitcoin is just off the idea of it's a hedge against fiat currency. That's the biggest thing that one needs to understand. It's not just Lambos and flying to the moon, as that's kind of the what is pumped in social media. The idea behind it is just this fiat currency, this devaluation, this fall in the US dollar, the fall in fiat currency. So that's the reason, a case for cryptocurrencies and for Bitcoin. Now, you have cases of also people talking about the government can come and ban Bitcoin, and they can come and create their own Bitcoin and create their own government Bitcoin. Sure, definitely, 100%. You're not wrong. You're not wrong that the government can come and create their own digital currency. Actually, we are seeing that today. We hear, nations like, for example, China and Russia talk about creating their own digital currency. We also hear about oil being backed up by a digital currency. This talks of getting off the US dollar. So sure, definitely, definitely you can get government intervention. Now, in terms of Bitcoin being banned, we don't know. I can't tell you right now and say that no, that's not going to happen, or yes, it's going to happen. It's hard to say. But if it were to happen, it should have happened a few years ago. The government should have stopped it. And how things are going and how the news is going, we are seeing that the government, especially more on the Democrat side, being more open to Bitcoin. We are seeing Bitcoin and Ethereum being adopted, moving into the futures exchange on CME. Bitcoin being traded already, and Ethereum joining the game also. We are seeing adoption in that sense. And, we are seeing also the Biden to be, choosing the next new SEC chair to come in. And if that chair is pro-Bitcoin, you can see probably an adoption of it. And if a Bitcoin ETF comes out, then you can see an adoption of it. Will they ban it? I mean, how things are going right now, when you lay out the news and the facts, it looks pretty positive. Could they come out and flip, 360? Maybe. And on top of that, you also have now smart money moving into it. You have family offices, wealthy individuals moving some sort of wealth, allocating some sort of wealth into Bitcoin. Because nobody knows. Nobody knows. The euphoria still continues. And I believe it will still continue. And if they were to ban it, they should have done it already. My take is, if I were to have a take on it, is that Bitcoin will still remain. Sure, there could be a government currency. I believe it'll just become another marketplace. When you have government coin and government crypto and coming out, you're not going to ban all other cryptocurrencies unless, I'm not talking about the ICOs or the scammy coins or anything like that. I'm talking more of a healthy marketplace where it's not just one government coin that is out there. There's going to be multiple probably digital currencies, one from the US, Russia, China, and also in addition to Bitcoin, Ethereum, and so on, to create this marketplace, to create a market. To like today we have the US dollar, like today we have the pound, like today we have the Canadian dollar, we have the euro, the yen. They all create a currency market. The same way, it wouldn't make sense to start banning all these, Bitcoin in particular, because you want to facilitate and create a digital market, if that's what the government wants to do, if that's what they want to push forward for. And for people who've already invested in Bitcoin, and for family offices who have already invested in Bitcoin, if you start banning it, what is going to happen to them? So, a lot of questions. I'm not sitting here telling you how it's going to be and trying to predict the future. I'm just telling you kind of both cases, both sides of it. And my views on it is, it's looking more optimistic. Things are looking better for Bitcoin. If it were to be gone, it should have been gone when Bitcoin was at 3,000. It should have went back to zero. So that means the euphoria is not done. Bitcoin trend is not done. So anyways, I could go on and on about this, and maybe I'll set up some sort of podcast or another time where I talk more about Bitcoin. But this was big on the news with the 20,000 break, and now even Bitcoin hitting 23,000 and Ethereum hitting that $600 mark. This is a big move for pro cryptos. All right. Other than that, guys and girls, thanks for listening. Hope you'll tune in to the next podcast. Once again, keep an eye on such developments, such as the stimulus talks, Brexit, quad witching, which is coming tomorrow, and in terms of also economic data. We do have natural gas today, Canadian ADP non-farm employment at 8:30 a.m. And 8:30 a.m. today for the U.S. side, we have continuing jobless claims, housing starts, jobless claims 4-week average. Also at 8:30 a.m. we have Philadelphia Fed manufacturing. So a couple of economic data for Thursday, and so yeah. Stay tuned. Hope you'll be on the next podcast. You'll be listening, and thanks for listening. Cheers. Bye.